Welcome back, everybody, to DissedMedia, a startup story, the podcast where we take you behind the scenes of starting a business from the ground up. And, we've had more than a few guests on at this point. We're kind of in this rhythm now where we're getting people in talking about business, talking about startups and SEO, financing, funding, and how you find people with money. And then kind of importantly today, we're going to talk about when you do have that funding, or even if you're seeking that funding, how do you manage it? How do you take control of all of that and make sure that the resources are there? One of the biggest challenges I think that we've kind of discovered over episodes here, or if you're running your own business, is capital is precious. It is a resource that is necessary to be sustainable, and a resource necessary to keep things going. And so one of the things we like to do is explore topics that get into that. So today we have a special guest, Kunal Bhasin, who is CEO of One West, which is an organization that helps mid-sized businesses and companies and business owners start with how to keep that momentum when it comes to resources and cash going. So Kunal, without further ado, how are you today, sir?
I'm doing great, Ben. Thank you so much for having me.
Thank you. And thank you for taking some time out to kind of talk about this topic. I want to start out first, and we always like to kind of dive into a little bit of the background of people. As CEO of the organization that you're running today, where did you get to this point of founding this company, running this company, and doing the work that you're doing today?
Yeah, absolutely. So going way, way back, I come from a family of entrepreneurs as well. So I grew up around it, and I grew up around seeing businesses grow and unfortunately sometimes fail. So I had that in my blood and my life from a very early stage. I discovered this industry through a friend of mine. He introduced me to it. I started learning more about it. I had a lot of interest in it. I got a job at one of the larger funders in the space back in 2012, and I worked there for a while. And we were providing small business loans. Before that point, there's a lot of different types of small business loans we're going to get on in today's sessions. But the product that we were offering was fairly new to me. And I was like, damn, this is so unique. And it can get expensive. They had cheaper options. But basically, it seemed like there was a correlation between speed, and the faster you get the money, the more expensive it was. And if you're willing to wait and wait and wait, then you have better options available, is what it came down to. And I found that to be that it was really a lack of technology that was driving that. It doesn't have to be that way. It's just that typically the lower rates are coming from banks and more institutional type money, and they tend to move slower and don't have as much technology and can't process everything as fast. And I think you have those roads converging now, where some of these better options are becoming available to business owners who just don't have time, which is most of them. Started in that business in 2012, worked there for 5.5 years. In 2017, I felt like it was a good time for me to make the move, and I left and I founded One West from the guest bedroom of the townhouse me and my wife and 2 kids were living in. And it was pretty a stark contrast from going to an office with 400 people in it every day to working out of the guest room. And we built it slowly but surely. May 2017 was the first time I sat down and worked a full day for One West. And October of 2017, we hired our first employee. And today we're at over 100 people.
So one of the things that you mentioned there, and I think is a really important point, is that there's a lot of ways to source capital as a business. And the traditional route, and I think for people who have not gotten a lot of exposure to how to raise capital, you pretty much, you hit family and friends up maybe first, and then after that, maybe some credit cards, and then you go get a bank loan, right? But there's a lot of paths to sourcing capital. So what are some of the ways and resources that you guys tap into?
It really depends on the life stage of the business also,
Yep.
Right? You have the pre-revenue stage, then you have the startup growth phase where there may be some losses, but there's revenue and traction coming in. And then you have the more established business once it's revenue producing, profitable, and has a large team. And each each one of those phases has its own set of different products and resources, and each one comes with its own set of lenders and its own pricing. This was a lot of the reason that I wanted to start One West, because it is such a vast network. And how does someone cut through it all? Because if you call any one of these lenders, and maybe the right product for you is product X, but you called lender Y may do a deal for you. And you may say, oh, wow, somebody's willing to give me a deal, but it's not the right deal for you because you don't know about lender X. And figuring out that whole landscape and having an advisor to take you through it. I think what you see commonly a lot, and the stories you hear about the most, is dilutive equity, where people take that on in an early stage part of their business. And, hey, I'll give you X dollars and you give me 20% of your company or 10% of your company or 50% of your company, but I'll give you the capital that you need to get going. That could actually, if your company is successful, which I think most entrepreneurs expect and want their business to be successful, that could be the most expensive loan anybody's ever taken. Because if your company actually does take off and you gave away 50% of it for $25,000 or $50,000 or $100,000, it could be the most expensive loan that you've ever taken, as that equity could end up being worth many multiples of that.
As I hear that, it reminds me a little bit of Shark Tank, right? Where a lot of times when they're buying into a business, they're taking equity, or Kevin Leary is notorious for taking points and getting paid back through through margins on the product to a certain point. But to that point, I mean, yeah, you may unwittingly get into a situation where you've given away way more of your company than it could potentially be worth down the road.
Exactly. And
Go ahead. Yeah, I'm sorry.
As someone who helps companies navigate on this side, there, I would say you gave the pathway earlier, right? You start friends and family, and then credit cards, and then banks. I think that's what most people would say is the general life cycle. But there are other resources too, the SBA being one of the best ones, whether SBA has startup type loans for up to $50,000 that they can help if you're trying to start a business. The US is trying to spur as much of small business, Main Street businesses to get going as they can. You saw it during PPP. You saw it during EIDL. You see it with some of these new programs that they're rolling out. The banks that are actually the ones issuing and distributing the SBA loans are trying to get faster. They're trying to compete with the alternative lenders. And you're seeing a lot of that now. And I think that's another big area. You mentioned bank loan, I'm mentioning SBA loans. Sometimes those terms are used interchangeably, but they are a different set of products, as the banks offer their own balance sheet lending, and then the SBA has their own. But as an early stage business, small or mid-size, those SBA loans, the 7A, the startup loans, the micro loans, as well as the 504, if it makes sense and the real estate makes sense, those are great resources. The terms are very generous considering the current market environment, and the SBA works with small businesses to get those approved, and we do them every single month.
And so, just for those who may not be aware, because sometimes when you, especially if you've got no exposure to this and you're kind of getting into it, you've started a business and you want to grow it. Maybe you started it in your kitchen, right? And you're like, I want to buy a food truck. I want to expand what I'm doing. And you hear this like SBA loan. Now, the SBA doesn't actually give you the money, right? They're more of a loan guarantor.
That's right.
How do you help people kind of get through that? Like, do you help them prepare for the documentation that they need for the SBA? Tell me a little bit more about that.
Yeah, as a small business owner, the term SBA loan, you're right, it can be confusing for people. It's, oh, do I need to contact the SBA? So the SBA provides a guarantee on these loans. So they go to the banks and say, if the customer ultimately ends up defaulting and it met our guidelines for an SBA loan, the SBA is going to cover the bank for up to 80% of the losses. So if a small business takes a loan and it met the guidelines for the SBA and got the stamp of approval, which the bank is handling with the SBA, the customer is not doing any of that, and the loan ultimately ends up defaulting, the bank's only on the hook for 20% and the SBA is on the hook for 80%. That's essentially what that guarantee is saying. Yeah. And that allows the bank to issue the loan at a lower rate than their risk parameters would otherwise allow for, or it allows them to make the loan at all. They wouldn't make the loan without it. So it's like having the bank essentially has that collateral, even though it may not be a collateralized loan, but they have it through the federal.
And then, That 20% oftentimes can still be, if you're buying equipment, there's a lot of ways to liquidate a business and hopefully make up that 20% gap.
So you would still be dealing with the banks themselves, and then you have your preferred banks and your non-preferred banks. And typically, One West will only work with the preferred banks on the program because it makes the process a lot faster and easier. And then, yeah, we would collect the documentation. We would be submitting it to the lender that we're working with. We would be getting feedback from them. And a lot of times, I hear small business owners say all the time, well, I got declined by the SBA already. You didn't get declined by the SBA. You got declined by a lender who works with the SBA. It doesn't mean that every single lender that works with the SBA is going to decline you. They don't have a 100% guarantee, so they still have to underwrite that 20% piece. And the banks have different risk appetites. They may decline a transportation business for no other reason except we did 20 of these deals last month. Let's not do any more. We can't just fill the whole balance sheet with transportation businesses. And that's got nothing to do with the business, but it's just a state of the bank. They don't want to do it.
It's funny. What you just said there reminds me a lot of even when you go down the venture capital route looking for a raise. You go, create a raise round. And a lot of times, founders will sometimes get a little dejected because they'll get a no or a few no's, but it's never really clear why the no. The no could be, to your point, they don't want to oversaturate their portfolio in that direction. It could be that, they want to they're holding out because they want to get into something else and just not that. But it's not because of your business. It's not necessarily your product or has anything to do with that. It could just be other parameters that are out there. So I guess the point is keep trying, right?
Venture capital guys is they're already invested in a adjacent competitor and they don't want to invest in a competitor to each other. And you hear that one on Shark Tank all the time too. I'm already in a deal that's very similar to this. I can't get involved.
Right. Yeah. They want to keep that focus narrow because they want to get more out of what they've already put into.
Exactly.
So when you're working with small businesses and talking about runway, what are some of the things that you try and help people with? Because I'm trying to imagine like your, and maybe you can help clear this up a little bit. Like when you think about your customer profile, who are some of your kind of your ideal? And I hate to lock you into that because I don't want to turn people away from saying, oh, well, they're not for me. But like, at what stage or what is that kind of profile of a customer that you guys know that you can really excel with?
So we focus mostly on non-dilutive capital, and we're looking for businesses that are in business for at least 6 months already and are generating revenue, at least $5,000 to $10,000 a month, depending on industry, is kind of the lower end. That is our target customer. But we get customers every single day that don't fit into that criteria, whether they're a startup and just getting started, or they are looking for venture type capital. Those we partner with other firms that we refer out and say, hey, we can't do the matchmaking for you here at One West, but talk to this company and then they'll help you on that side. But the target market that One West works with day in and day out is 6 months in business to as many years as you can think of that are looking for a loan for a business, not direct equity contribution into the business. And number one funders on the platform are between the SBA and the banks, and then you have the alternative funders. And we have a kayak. Your listeners and all of us have used Kayak or Expedia. Our process runs much of the same way, where the customer's coming in, they're connecting their banking data through Plaid or one of these services, and they're allowing us to pull credit on the business and in some cases on them personally, and that's a soft pull always. And then we gather all that information that Plaid and the bureaus give us. And then based on that, we're submitting the file to the lenders. And we're getting instant or very close to it responses from the lenders. And then once we have the options available, we display them to them like Kayak displays flights for you. This one's a little bit more expensive, but needs less documentation. This one is your cheapest option, but it takes 3 weeks to fund. This one can fund in 5 minutes, but it's very expensive. Which one would you like to proceed with? And then we have our agents available via chat, or you have your representative's phone number and email. and our agents will also proactively reach out if the customer has not accepted an offer. So there's ways to talk to somebody throughout the entire process, or if you're in a rush and you want to go, you can just self-service yourself the whole way through until the loan's funded.
So when you're a small business, and out of curiosity, is there a particular industry that you focus on, or are you guys kind of broad?
We have our top industries. We can service most of all industries, but I would say medical for 2025 was one of our highest, not medical in the sense of hospitals and insurance companies, but medical as primary care doctors, dentists, the practices. So medical was very big for us in 2025. Restaurants has been top 3 every year since I started the company. That's an industry we understand really well, that we've worked very closely with. Interesting times working with that industry during COVID, but everyone got through that time as well. So restaurants are also a big one. Retailers are a big one that we work with. Anything with a storefront retail, we work with a lot. Anything with a storefront services or retail, we work with a lot. And then trucking is also very big. Has always been very big.
Yeah, there's a lot of capital, investment when it comes to that.
Absolutely.
Necessary.
Equipment side and the working capital side.
So when you think about runway, like if you are a small business, you're going to start a food truck, going to start a restaurant, buying equipment as a transportation company. When you think about your runway, ideally, because you probably don't, it's probably not best to come when you're really desperate for cash. You should almost kind of seek cash before you need it. What would you advise people to do when they're looking at their cash flow and kind of considering whether or not they need access to more capital?
I have this conversation a lot. The first thing that they need to look at is their expenses. So before you run and take a loan, and we run into customers, I'm like, hey, you have 5 loans already. What's the plan here? This doesn't make sense. You're crushing your cash flow. You have a good business if you didn't have all this debt on there. Customers need to look at their expenses and their balance sheet first, really, is the first place that I look at with them or advise them to look at and see how they can run more efficiently and if they have to make tough decisions. And then if the loan is needed to extend the runway, then we look into that. And you're 100% right. The majority of our customers come when they need the money in the next few days. They don't come with the foresight of, hey, I'm looking at my runway and I'm going to need money 4 months from now. And that's why a high percentage of our customers, we stay agnostic in the choosing of the kayak drop down of all the different loan options for them. Our platform is called Able, and they're looking at them, but over 55% of our clicks are to the one that funds the fastest, not the one that's the cheapest.
Yeah. Yeah. So do you ever get people looking to sell off their receivables or anything like that?
Yeah, that's a common one. Lines of credits from the alternative funders is probably the hottest product right now. That used a few years ago, lines of credits from I won't name names of companies on the call, but lines of credits from the alternative funders were 2-3% of our business. Last year it was 35% of our businesses. More and more players are popping up in that market. And you have a lot of household names launching these types of products now. DoorDash is in the market. PayPal's in the market. Amazon got into the market. GoDaddy just announced that they're getting into the market. So all these ancillary business services companies are launching their Square and Stripe. Those are massive players in the market. So you have all these bigger names and household names coming in now and offering these types of products because everyone's seeing the gap within the industry.
Yeah, it's really it is really interesting, and I think especially kind of looking ahead to 2026. Some of the changes at the Fed, some of the reduction in the goal is to get interest rates down, and that's going to hopefully free up some capital, and people are going to maybe lend a little bit more. How are some of those things that are on the horizon? How are they shaping a little bit of what you guys are looking at? As you look ahead.
Yeah, I think you saw a little bit of the interest rates started to pull back in 2025, and the lower interest rates is certainly good for our business and for our industry overall. The tariffs were a tumultuous thing of 2025.
Yeah, that's true. I'm sure you had a lot of people hitting you up. You got product on the water, and all of a sudden, 20-30% more.
The numbers were changing so fast. It was like between Monday and Friday, there would be very different. bill that was coming to them once the goods got to port. And that was a hectic time. So I think the interest rates pulling back will certainly be a breath of fresh air, both on the real estate side as well as on the unsecured side, as those lower rates is going to push more dollars to be lent out, and then that'll ultimately drop the prices and the cost of borrowing to the small business owners. But we look forward to this year, given that the anticipation is that interest rates will continue to drop. And there's a lot of demand right now. There's a lot of demand and I think it's pent up demand with all the tariff talk of last year. I think a lot of small businesses that were looking to make expansions or build outs or try to invest into a new thing hit the brakes a little bit and said, all right, let's wait and see what happens a little bit. And now we're starting to see that action pick up again.
Well, and I think for a lot of small businesses too, the incentives that are built in from write-offs for investing in capital, being able to write off 100% of, your capital investments this year is going to be pretty beneficial.
Right.
So how are you, as we're kind of getting into the new year, how are you seeing some of the changes that have been made? The big, beautiful bill's been talked about a lot. How is that affecting some of the people that are coming to you, or some of the businesses that are popping up now?
Yeah, we're seeing a lot more, especially on the equipment side of our business, which is a growing piece. We're seeing a lot more capital expenditure for the same reasons that you're talking about on the heavy equipment side as well, because of the depreciation that they can take. That's probably been the biggest impact. One of the industries that we lend a lot to, it's not in our top 5 that I mentioned earlier, but construction is also a big area that we invest into. And we've done a lot of working capital loans over the 5-6 years, but we're seeing more interest on the equipment side than we've seen in a while. So investment into heavy machinery, I think, is a direct impact of the outcomes from the big, beautiful bill and the write-offs that they can take. So that's one area that we've certainly seen it. And I think that's what it is. The capital expenditures, people are picking up on that side now that they know the benefits of it on the tax side for them. And that's why we're seeing this request for capital, because they can deploy it and then capture those savings on the back end.
So when you think about this industry that you're in, what are some of the trends that are going on that that maybe you feel like there's information or an approach that people maybe haven't considered in the past that it's opening up and creates a little bit more of an opportunity for now?
I think the biggest one, you mentioned it earlier, the selling of the receivables. Those tend to be the highest interest business loans that I have seen. Yeah. They have the most aggressive marketing and they have the most aggressive outreach to small businesses. And I see customers taking that way too often because they don't think that there's other options available for them. And like I was mentioning earlier, lender X is your best option, but you end up talking to lender Y and you end up going down lender Y's path, and it's not the right path for your business. There are instances where selling a piece of your receivables, if you need a cash injection today and you can pay it off in 3 weeks, okay, it may make sense. But to use that as your long-term permanent financing, there's no business that I'm aware of that can sustain those margins long enough term to make those payments for a long-term period of time. Having the education around these other products that are available, whether it be equipment finance, whether it be factoring, whether it be a bank loan, whether it be some of these SBA programs that I was mentioning earlier, whether it be the microloan SBA program, whether it be grants that often pop up on the SBA side, just educating yourself on all the products and having the foresight of planning. Don't go to get money when you need the money that day. It's going to end up being extremely expensive.
Right.
You can go with the foresight of planning and get your paperwork together. Getting that right loan is the most important part. And too often I see people come to us when it's too late, and the conversation is not, hey, how can we get your runway stretched out? The conversation is not, this is what I need to invest in the next quarter so I can have, this is my plan and this is the expenses and this is how much I need. The conversation is all too often, I've taken these loans and now I'm stuck. And that unfortunately puts us behind the 8 ball. Of course, we help those people and do what we can, but it makes our jobs a lot harder. And it's not going to be as effective as if you had just come to us in the front.
Yeah, because this is something that happened in the past is that, people will take an adjustable rate like balloon kind of loan. And what ends up happening is when we have a downturn and all of a sudden that adjustment is huge and then it becomes due,
Yeah.
that puts a lot of businesses in a bind and ultimately, creates a lot of bankruptcies or, going out of business almost immediately.
Yeah, coming out of the financial crisis also with people's homes, so many adjustable rate mortgages on people's homes. And it's the lack of knowledge in what people are signing up for. People will take a loan so quickly without fully understanding what it is. That's why we really try to spell it out on our platform right there on that front page while you're selecting the offer. Because some of the contracts from the lenders can be overwhelming too. It's 44 pages. Just people are so used to, when the privacy policy pops up on a website, just
Scroll down to the bottom and click. Sure.
Yeah. You can't do that on a loan agreement. You're signing a loan agreement now. It's not a privacy policy.
Yeah. I think that's a good point. I think that's quite honestly how a lot of people got in trouble during the housing bust is they just had no idea what they were signing up for.
Right.
So when you think about businesses that are needing capital, what would you advise would be the optimal kind of number of days ahead of time that you should reach out and start getting this process going?
Yeah, I think the first would be to shop the different brackets of the categories of the type of financings that are out there. And we talked about some of them on this call today. Figure out which product is right for you, or use an advisor like One West, or there's several of them out there that can help. Make sure you check the reviews and figure out who's reputable and who does a good job. And you can check BBB or Trustpilot for the reviews and find a reputable company to help you navigate it. If you want to navigate it yourself, there's good resources out there like NerdWallet, which will teach you about all these different products. Figure out which product you want, then figure out which lender that you'd like to work with within that product. If you start with searching for the lender, and I think that's where people go wrong as well, products don't have big marketing teams. Lenders have big marketing teams, and they're the ones doing all the outreach. So the people see lender and they're like, oh, this lender seems good. Yeah, they were good, but it was the totally wrong product that you needed. So figuring out which product first and then lender is the first step in getting this correct.
Yeah, I think that's what kind of what I like about what you've told me about what you guys do there, which is you have a broader knowledge of what's happening in the industry and across a lot of different lenders. Because if you're not an expert at this, if you don't work in this space every day, it's really hard to know what the right decision is to make. And so oftentimes I think people just pick the decision that's make the decision from the options that are in front of them without any idea of what other options exist out there.
And we all do it.
Sure.
We all do it for smaller purchases. If we're buying something buying a printer or a laptop, I don't know, someone who's in that business could probably get a better deal than me because they know the ins and outs of how it all works and who to call. But for a loan, something your business is signing a guarantee on, it's important to educate yourself or find someone who can help you navigate that process. It's not the same as buying something from the mall.
Yeah, no, that's very true. I think it's always important to try and work with people who that is their thing. That is the industry they're in. It's the job that they have because they have the most exposure to it every day. And you're just going to know kind of the patterns of what's happening and when things are changing or even on the horizon to change. Hopefully 2026 is going to, shape up to be a pretty good year, but who knows?
So it's early, but we're all very optimistic here.
I think there's a lot of optimism. So we'll have to see how that goes. So, Kunal, thinking about One West and all the things that we've talked about today, is there anything that you feel is, maybe something we didn't touch on that is important for people to know?
Yeah, when working with an advisor, also, this goes back to choosing the right advisor up front, they should be able to provide you with multiple options. If they're only providing one option, a lot of times I would also be a little bit skeptical because what a lot of unscrupulous advisors will do is show all of the advisors get paid a referral fee from the lenders for delivering the business to that lender. That's the revenue model for us. That's the revenue model for all the other advisors out there. When an advisor only shows the one offer, oftentimes it's the one that's paying them the highest referral fee, which again may not be the right one for the small business owner in question. We go and show all of the offers, which sometimes can be too much information overload, and we're always looking at ways on how to structure it so it can be easy to digest and understand. But it shouldn't be one. It should be at least 3 or 4 different options where you can choose from. So that way you can pick the one that works best for you, not necessarily the best one for the advisor.
I'm a data person by nature, and so I'm one of those people. Like, I like to know all my options, and I kind of get into the sub options, and what makes.
We used a kayak comparison a few times, and they do the same thing. You'll see a direct flight from New York to Miami for $250. Then you'll see one like 2 hours later for $3,000, and you're like, who's going to take this flight? But they show it. People must do it.
You never know. You never know. Well, Kunal, I really appreciate your walking us through all of this. Give me a little bit. How do people get in touch with you, with One West, if they want to pursue a little bit more of this and get in touch and find out what their options are?
Yeah, if they're looking to apply, they can go to onewest.com and just follow the on-screen steps. And if they want to talk to me directly, Kunal at One West, that's the number onewest.com. And if they want to call in, 888-881-WEST, and they can talk to one of our advisors on the phone, and I'm sure they'd be happy to walk them through the process.
Awesome. Well, I really appreciate the conversation and the information. As I was mentioning at the top when we got started here, unfortunately, a lot of businesses, there's a lot of ways. There's a lot of options. There's a lot when it comes to money and resources and financing. Previous episodes, we've talked about venture capital funding. We've talked about crowdsourcing. We've talked about people who market.
Yeah, we didn't get into all of them. And you mentioned credit cards, and then family round, and the angel round, and then there's so much of this information overload. And I think it's overwhelming for a lot of people that don't live in it and don't understand it. And there's not enough education around it before people start businesses. It's kind of trial by fire once you're in it.
Absolutely. Absolutely.
One of the other biggest problems of it.
I appreciate, again, the time, the information. I look forward to seeing what we can do by getting this conversation started and pointing people in your direction.
Absolutely. Thank you for having me.
Well, thank you. And for everybody else, thank you guys for checking out DissedMedia, A Startup Story. And as always, we like to say, share this with a friend, family, people who you think need to know this information. There's a lot about running a business. There's a lot about being an entrepreneur, about being a founder that, a lot of times we don't have all of that information at our fingertips. But, we're here to help provide a little bit more and give a little bit more guidance to all that. So thank you guys for checking this out. Hope to see you back next time, and have a good one. Thanks for listening to DissedMedia, A Startup Story. This podcast was produced and edited by Ben Olmos and is a production of DissedMedia Corporation. If you're interested in learning more about anything you heard on this episode, please reach out to us at podcast@DissedMedia.com. You can also get more information about this and other episodes or information about our guests by checking out dailypitch.news, our business and insights publication focused on helping managers, leaders, and entrepreneurs get better at what they do.